Hello viewers, in this video I'll be going over the S&P 500 ETF ticker symbol SPY. At the moment the S&P 500 is down 3 basis points and we still have about 3 hours left in trading. On the 1 hour chart we are currently positive on the 1 hour MACD. On the 4 hour chart we just approached positive mark on the 4 hour MACD, and I believe we may hit resistance soon. The resistance is this 200 moving average on the 4 hour chart. I'll mark that as resistance. The price is at 289, and as we extend out to the daily chart, that resistance also coincides with the 18-day moving average, as you can see in this purple line. And we made a decent recovery on Monday, and we ended up being green in all past couple of days. And as you notice, one part of the MACD is now negative, so I still believe this downtrend is still going down, and we still need to test this resistance. If we do break about above it, then the downtrend has broken. But as of now, I do expect this to be rejected and we head down lower. So the next support is this 200-day moving average at the price of $277.55. So if we were to move up higher, and that price resistance is only about 40 basis points, and if we were to reverse and continue down, that price movement will be around 3% and 3.6% move down. On to the next module. So I'll compare today's current trend with this trend that dated back to January 23rd, 2012 to April 18th, 2012. I'll point out why these two charts are similar. So what we have here in the beginning of the trend, we have an uptrend that lasted for several weeks, and then we immediately broke through it and touching the bottom Bollinger Band right here. And as you notice in this instance, we closed right below the bottom Bollinger Band right here. And I'll just make this, I'll just leave it as a red circle, and then we proceeded to move on higher right here and trying to attempt to touch the middle Bollinger Band right here. So we have that, and as you can see, we had a similar up channel that lasted for several weeks, and after that it quickly touched the bottom Bollinger Band right here, and we do see the price closing down and then another touching the bottom Bollinger Band, and then we have the instance of closing right below the bottom Bollinger Band. And we do see an attempt to touch the middle Bollinger Band right here. So what we have here is 1, 2, 3, 4 points, and 1, 2, 3, 4 points that are similar. And there's reason to believe that the trend or patterns are similar. The outcome or forecast would also be similar. So let's check the forecast model. I'll go day by day where the S&P 500 went to back in 2012. So 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So the chart that we took a look at was January 23rd, 2012 to April 18th, 2012. And back then, the S&P 500 was up around 1.3%. And here's the line graph that I overlapped it, comparing to the current trend here, and with the 2012 trend. They overlap pretty decently. And that is all. If you enjoyed this content, feel free to like, subscribe, and thank you for watching.